Good afternoon, traders. I trust you are all well. Just following on from the video at the start of the week. In fact, this week's been very, very quiet. Not too much or not too many opportunities out there at all. Sometimes, as we suggest, it is better to sit on your hands than give money back to the market. This afternoon, we have started to see a push. There are a few moves that we've been waiting for since the back end of last week, start of this week. A lot of the majors are currently in phase two, and we're now seeing that dollar push getting back into certain areas that could be interesting to look for a reversal, look for a change of direction. First of all, dollar index. We highlighted the 9760 region for price to pull back. Once we saw a complete break of trend, first lower high formed and down we've gone. Of course, this was the ideal opportunity to sell across the dollar majors. Hit the 200 moving average, and also not highlighted here, but this did meet the daily pivot as well. So pullbacks into 9760 is what we're looking for. As I suggested at the start of the week, when we're seeing a change of direction, especially with the dollar index, euro, and other majors, it's never as clean as we'd like to see it. In an ideal world, we're like a pullback, bearish price action, and a strong drop. But if you look at the areas previously where prices changed direction, we've consolidated for a matter of days. So we never really see that clean change of direction. As you can see, over a long period of time, in fact a week, the market starts to consolidate. So please do not get caught diving into early. Once we're in this 9760 region, if you do see some consolidation and some buyers and sellers fighting each other, not a problem. Let's look for strong bearish price action to break below. And for me, this would be the last dollar weakness move until we sort of see a seasonally strong period during November. So I am looking for a pullback in this zone and then an opportunity to sell. So all of this here being phase two, yes, there is opportunities to make money in here, but what we don't want to do is trade in the weakest part of a trend. Phase two always shows messy behavior, messy price action, which is where you can get spiked in, spiked out of a lot of opportunities. So for me, the ideal opportunity would be once we get in and around this region, price may consolidate, as we know price does several times, and then look for bearish price action to leave you back in the market short. Euro dollar obviously pretty much being the opposite. We were looking at 1090 being the area to target, and we've actually just dipped in this region here. So what we did anticipate was the daily phase two of euro dollar, which led us into euro yen, euro Swiss opportunities too. Again, trading phase two, the weakest part of the trend, is not ideal. So let's be patient, wait for the next push. If we scale up to a weekly chart, you can see the price is pretty much in this bearish channel. We're stuck kind of in this region here. So I do see a push up to top resistance, as we have done several times before. This would lead us into a nice period to sell euro dollar back in dollar strength in November towards the back end of the year. So this does tie in quite well seasonally. But again, I would like to see a little push higher from the dollar. So get back 1090 again, just like dollar index, we may see price consolidate as we do look for that change in direction. As we can see, it has done several times before, and it does behave in this way. So again, if we start to see consolidation over the next couple of days, not a problem. Let's look for strong bullish price action, ideally rejecting the 20 moving average. And then again, you've got about 100 pips in play, just over 100 pips in play to the top weekly trendline channel. So that will lead in nice. And what we've got to remember now, if we're backing euro dollar long, we're looking to buy, once we see the phase two completion into phase one, we're backing euro strength against dollar weakness. So if we're backing euro strength, we need to capitalize and identify how else we can look at some of the euro cross pairs to also take advantage of a strong euro. So as we can see from a weekly perspective here, euro has been holding up very well. You can see over a longer period of time, since pretty much December 16, we've been in a strong uptrend. Yes, we have seen this head and shoulders reversal pattern recently, but for me, I'd be looking at strong selling down into this bullish channel. And again, that will show the euro weakness back into euro strength. So opportunities across the board. Euro yen as well, we're very, very low on the chart, euro yen. And as you can see, we're pretty much seeing a very, very similar formation to what we see on euro dollar. So all the time that euro dollar is in phase two, again, the selling part of an uptrend, the weakest part in trend, we're happy to follow the same pattern across alternative euro pairs, i.e. euro yen. So my level's marked in at 120. If we do get interaction down to the 120 region, so another sort of 45 pips, and again see bullish price action from here, that would be the indication for a second move higher. This from chart pattern structure is really nice, so it looks good. And again, use the 200 as your first target, break above, manage accordingly. Euro Swiss, I am still looking to be a seller of Swiss. Messier price action, but again, same principle, pull back and bounce, and use the 200 moving average as your opportunity. Now, of course, this is a daily chart that we're looking at. So once we anticipate the daily move, it then opens up the doors where the smaller time frames provide more cycles, more bars, more opportunities, and again, provide us with plenty of opportunities using our core strategy. So something else which is behaving in a very, very similar manner to the other charts is pound. Of course, we've got Brexit and whatnot that can affect the pound, but if we're looking from just a chart structure principle, that we're seeing clear high, clear lows, so price is trending and behaving in a manner that we can recognize. We know how to trade this pattern regardless of pound and anything that can jeopardize movement of the pound. Looking at this from a chart structure perspective, we know how to play with it. So currently, yes, we are in a phase 2, and I do see price pulling back to the 1.2755 region. So we've got another 70 pips for price to play with. So this is where we need to make the decision to say, okay, I believe that pound dollar may move another 70 pips lower to then give us that change of direction, the bullish push higher. So we need to say to ourselves, okay, am I confident selling on a phase 2? Well, if I catch the beginning of the phase 2, then quite possibly. If I'm in the middle of phase 2 where I'm sitting now, I don't want to be jumping on a train that's already left. So moving to the smaller time frame being the 1 hour, where of course more cycles, more bars, more opportunities. Yes, price is heading lower, but all of this is very messy. It's not the clean price action we're used to when we see trend-based positions. But of course, look, 2050 crossover, lower high forms, opportunity to sell. So there was sort of over 100 pips in play today, selling pound dollar. Are we confident trading phase 2? Probably not. We've got better reward to risk when we trade back in direction of the overall trend. So that's pound dollar from a daily perspective, and some of the other pound cross pairs are very, very similar. So pound Kiwi is the same as well. I'd be looking for price to come back to this region, so just above the two mark. So you've got another sort of 100 pips in place. So if we can drop down to 2, form bullish price action again, leads us in back in trend. Previous high from 2 is 460 odd pips. So again, reward to risk wise, fantastic. And when we see our daily chart move in a favorable manner that we understand like this, of course, there's so many more bars on the smaller time frames. If you're looking for opportunities and cycles to get in, because you've seen that daily move, it then provides you with 4 opportunities and bounces from the 20 moving average, bullish price action to lead you in. So be patient. The fact that we're in a lot of these daily phase 2s across the majors is fine. Be patient, wait for change of direction, back in trend, trade with the trend, go with the flow, swim with the tide, however you want to call it. There will be opportunities there. We just need to be patient. We do not want to get caught up over trading in a period where there's nothing out. There's not much happening in the market currently. We're in daily phase 2s. It's messy price action. There's not much momentum out there. So just be patient. Pound Aussie's the same. Pound Swiss, I'm still looking to be a buyer of. As you can see, price is consolidating. So I do expect a dip lower before providing us with a long opportunity. But again, chart structure-wise, this is fantastic. Definitely opportunities out there once we get the market back trending in phase 1. Pound CAD's the same as well. I think pound CAD will move off the 200 moving average. We'll see a couple of days consolidation before a push. And of course, always relate your cross pairs back to the dollar. If you're looking to buy pound, is pound strong against dollar? Is pound dollar trending? If you're looking to sell CAD, if you're buying dollar CAD, what's happening with dollar CAD? Is it moving up? Are we seeing bullish dollar CAD, meaning a weak Canadian dollar? So you are looking to bully it with a strong pound. So we've always got to correlate pairs and take it back to the dollar. So Kiwi as well is in a similar position. Today's been the first indication of the daily phase 2. Kiwi hasn't moved as well as the others, as we've still seen a bullish Kiwi out there. Some of the Kiwi cross pairs have. Kiwi CAD is so low on the chart, I'm looking for bullish price action to turn and lead me in. Double bottom formed in here. So it's doing all of the right things. We just need to see a bullish push as confirmation. Kiwi Swiss as well, price failing to break below support. So there's buying pressure being pumped into the market. We're slowly starting to cycle. For me, I'm looking for price to get back up above the 63.90 region, and I'd be looking for a buying here once we break out of this small range, shall we say. And again, so low on the daily chart, plenty of opportunity to take the market long. Again, look at this from a strong downtrend from pretty much the 12th of March. Several cycles in the way, but definitely long-term opportunity out there. It's not unrealistic for price to get back to where it was at the start of the year. Kiwi yen, just like some of the other yen pairs, again, price low on the chart, failing to break support. We saw a very similar pattern on this on like Euro Pound, Euro Swiss back before those long moves happened, and we're now seeing this come into play. So I would like to see a pullback and bounce, which would be the first higher low formation at the start of trend. Again, all of this room to move into. 200 moving average being the first target, breaking above we'll look to manage. So just like some of these yen pairs, all we need now is a daily phase 2 to pass and an opportunity long. So again, for some of you intraday traders, you momentum based traders, you need to make the decision whether you look to sell on a 1 hour time frame, momentum based, look for 15-20 pips then manage, or you be patient and wait for the high probability setups long. The trades with trend where we can be patient. Once we're in a trend-based position, fantastic, let one run, and then get in on the smaller time frames and take full advantage. So looking from a 1 hour perspective here, what was a beautiful uptrend now broke cyclicity. So this here shows that the buyers are running out of steam. What was strong buying in this region is definitely not what we're seeing here. So I like to use the 20-50 moving average cross as an additional confirmation of a potential change of direction, which is what we've seen. So we have kind of seen this push now. Price consolidated overnight. It's only this morning. It's only this afternoon that we've seen a push. We're 20 pips up if you took a break from that low, which is one of the strategies that we use. And you've got another 15 pips into the 200 moving average. So again, the high probability setups are back with trends, but we're not ruling out making money in this area. Just make sure you understand where you are in trend and what you're currently seeing. Swiss yen is another alternative, although personally I'm looking to be a seller of Swiss against other majors. This structure here, double bottom break, creates a new high phase 2. So this area in here again could be an opportunity to buy, but we're tucked up in and around the 200 moving average, which we previously rejected several times. So this to me now is an area of indecision. If I get a pullback, break and bounce, then it could be something I'm interested in. CAD yen as well, I'm looking to trade phase 2. I can see this happening. Weak CAD in place, so opportunity there. Again, higher low forms. We're just looking for a break and bounce. As long as price stays above the 200 moving average, which again, we can see that it's rejected several times before. I just want a phase 2 back and then look for the next move along with selling the yen against other pairs. Aussie yen again, moving very similar to Kiwi yen. Price holding up well. There's got to be buying pressure there. Price failing to continue moving lower after such a strong downtrend. So again, just phase 2, back in trend phase 1. So again, it's down to you depending on what your style is, whether you look to trade this momentum on the smaller time frame. Personally, you've missed that now because we're meeting the 200 moving average, but 20-50 cross, seller's bar, there has been opportunities to sell today. 20 pips out there up for grabs. If you can be banking 20 pips a day as an intraday trader, be happy. Of course, there's room for improvement. 100 pips a week, that'll do you as a beginner. And then the key there is how can I compound my account, increase my trading capital, where I'm trading a reasonable lot size, I'm trading risk managed still that's providing me with enough to generate a secondary income or moving this into a first time role, whatever your sort of financial goals may be. Pound yen, again, pound yen's another example of being in a phase 2, but make the decision. If we're looking for the 200 moving average as a target, you've got 150 pips move on a daily time frame, which probably will see a couple of opportunities short. So if you are trading pound yen, opportunity there to sell, providing pound dollar continues to sell and continues to stay in phase 2. That's what I'll be looking at. So I'm looking to trade pounds once they're back in trend, the majors once they're back in trend, and yen crosses once they're back in trend as well. Gold, I know some of you guys are all over gold at the minute. I'm just going to take you up to a weekly perspective here. Clear formation, phase 2 that we're in. Ideally, of course, we want to see price rejecting the 20 moving average, but the reason why the market's so choppy is we're in a phase 2 of a weekly time frame. That's why all of this region here, yes, there's room to make money, but again, spikes, indecision, consolidation, ranging, then pumped by momentum and safe haven buying. It's not ideal. We're happy to buy gold when we're seeing this clear bullish price action, not when we're trapped in an area that's going sideways. Again, indices started to sell off today. Again, remember when we see indices sell off, we tend to see yen pick up strength, gold pick up strength, which is typically what we saw this morning. It's now starting to turn. Again, look, there are room to make money here. I did see a bullish push this morning when we was in this region, but you're just trapped in here. We want to see nice, clean breakouts. We want to be buying US 30 Dow Jones when we're seeing this, because US indices move so quick. It is a real asset to trade momentum based. Don't get caught up trading a sideways market. This week, too many of you are over risking, over trading, and trading opportunities that do not meet your rules. That's simply because the market's been flat, it's been dead. There's not much drive, not much momentum. ECB press conference this afternoon was a waste of time. There was no movement at all. So we then look on to next week, where we've got a heavy week of news. Take a look on forexfactory.com, filter out to high impact news announcements, and go from there. So guys, there are opportunities out there. Use the dollar, wait for dollar to get back, end of phase 2, start of phase 1 short, which will lead you into multiple moves. Once you see the majors move, it then gives you permission to trade the cross pairs in my eyes. If I can understand how my two current crosspair currencies I'm trading are performing against the dollar, and I'm seeing one strong, one weak, that's going to give me drive and momentum across my crosspairs. Okay, guys, so quick recap. Any questions, feel free to get in contact, drop me a message. More than happy to give you a call and have a quick catch up. But good luck, guys. Friday tomorrow, so let's see what happens tomorrow morning. Okay, good luck, guys. Happy trading.